Good morning, options traders, and welcome to the weekend update here with Steve Ganz. And it is Saturday, November 16th, and I just want to kind of take a look at our markets here from the past week. Now, if you recall, last weekend when we were up here at these all-time highs and at the top of this channel, I expected and indicated that we would either go sideways a little bit and or likely pull back, and that I was expecting the pullback to come to the top here of our prior high. And I also said that it could continue beyond that and maybe come down and hit this line, creating the bottom end of this wedge. So those were my likely scenarios. Now, I like to give odds to things. I would say this action that we saw was probably about 60-70% likely in my mind. I think a little less likely is that we continue down to where we hit this line, and even less likely yet is coming down here to the 5,700 point. While I do think that's a possibility, I think it's certainly a lesser possibility. I also felt, as you recall from last week, that it was a lesser possibility that we were going to break out to the upside from here. Now, we're forming an uptrending wedge, which is a bullish pattern. So after we retrace like we did here, if we do start to climb higher at that point, I think it's more likely we could break out of the top of this. But for right now, my expectation is just a sideways chop here from probably the 5,800 to 6,000 range. That would be what I would think, barring any unexpected news, events, anything like that that might dramatically shift the market. So that's SPX. Let's just look at SPY, its baby brother, and you'll see that I had drawn these channels in SPY. So SPY would run up and then would have a little bit of a sell-off. These are all daily bars, by the way. Then it would run up at about the same angle, and then it would have a sell-off. And then it would run up again, and we're still well inside this particular channel here. So nothing that I see right now indicates a break out of that channel. Now we do see increased volume here in the sell-off. So that's mildly concerning, but not a big deal when I look at VIX, when I look at volatility. Volatility, while it did elevate here on Friday, volatility settled way back again. So this is telling me that there's not significant fear in the market. There's not lots of people out there buying insurance on their on their portfolios right now. So we can also finally look at RUT. And if I take a look at RUT, again, RUT is doing pretty much exactly what I would expect. I said after this breakout, likely scenario would be a pullback to these tops in the 2280 range, which is exactly where we're at right now. From here, again, much like the SPX, my expectations are it could come a bit lower down into here. More likely than not, I'm thinking that we're probably going to reverse and maybe chop in this channel from 2450 down to 2300. I do see that I can likely put another trend line on here, an uptrend line. Let me get my line out, my line tool. There's a lot of tops that all kind of coincide. Again, much like in SPX. The only difference here is if we take a look at this wedge pattern, if you will, the wedge is widening. It's not tightening up, except here in the very end it is starting to tighten again. So let's just draw that in here as well. So yeah, this wedge is sort of tightening up a little bit also. So I think this is a very legitimate pattern to be looking at here right now. Again, expectations on this pattern. Maybe it comes down to the bottom of this channel before it bounces, but right now I'm thinking that we're likely to see at least some stabilization, maybe a little bit of a move back up here this next week. And again, more likely than not, a channel here from 2440 down to around the 2300 range in RUT. So all of this sell-off is at this stage normal, to be expected. In the industry, it's called backing and filling. It helps strengthen the move that we've had. And the fact that if you do get this sell-off and this sell-off does not continue, that tells us that the people that are holding their positions at this point have firm convictions and beliefs about holding those positions, so they're less likely to sell. When they're less likely to sell, well, if somebody wants to own whatever that asset is, they're going to have to pay up a little bit for it. As soon as they start paying up a little bit for it, that's when prices start to rise again. So that's kind of the psychology behind some of these different moves. So with that, I'm going to wrap up the chart analysis here for this week. Again, Saturday, November 17th or 16th, excuse me. And that's it for now. Take care, everyone. All right, so those of you that are in the alert service, let's take a look at our current positions. So in our current positions right now, this position's holding up very well. Added this call spread when we were at that high of the market last week. That's playing out just perfectly for us, allowing us to squeeze more profitability out of this trade. This trade, while it has 27 days left to go, I'm thinking probably sometime later this week I'll end up closing this out, or at least thinning it out considerably. As you recall, this week I greatly reduced the downside risk by rolling up the put on this side. And so this used to have about 5,000 in downside risk. Now it's about 2,000 in downside risk. This particular trade also doing well. Added the call spread in here at a timely point. And that call spread is going to be very profitable right now. It's getting a little bit of pressure here to the downside. But again, based on the analysis I just did, my expectation is for the market to hold a little bit or possibly start to rise just a little bit. And that will bode well for this position. And this position has plenty of time left on it as well. And then I just entered the new SQ leap trade where I bought leaps in SQ based on my fundamental analysis. I mean, look at that days to expiration, 790 days out. So this is just going to set here. We'll see what it does. But this is kind of a stock replacement, if you will. I could buy into this position for $2,500 for a single leap. Now, personally, I bought a number of additional leaps in my own IRA account because I do like where this is at from a fundamental standpoint, but I wanted to demonstrate that here to students. So that's why I went ahead and did a single one here, keeping the risk in the trade at the start in the $2,500 range. And then, of course, FTNT continues to plow along. Now, I will say that FTNT, one of the reasons that I did this move over here is because had I done that in FTNT, while this is very profitable at $2,400 almost, it would have been much more profitable had I bought a leap. So I wanted to kind of compare and contrast, if you will, what selling puts does if you don't ultimately get assigned. I mean, if we had been assigned this back in the very first time I sold those puts, this would be better off, but I would have had a lot more money tied up in it as well because I would have, in this case, bought 200 shares of FTNT. So that would have been a significant amount of capital that I would have had to put into that. But just to show the two different variations, one, just buying a leap, a long call, if I'm bullish, versus selling puts on the way up. They're both legitimate strategies, and they both can certainly make some money, and I just want to compare and contrast those two. So now the final trade is this one. Again, same issue here because, I mean, this is taking a little bit of pressure, but because my opinion is that we're likely to stabilize where we are or possibly start to rise back up a little bit, I really don't want to do much with this one yet. Now, if I'm wrong, if this starts to sell off further, then I need to look at a couple of things. I need to look at somehow raising this left wing a little bit or potentially adding in a put calendar down here below, essentially turning it into a double calendar. So that will be a couple possible adjustment plays here if I don't start to get some form of a little bit of a rally or stabilization in the market. So that kind of gives us a run through on the current open positions in the alert service. And thank you so much, everyone, and we'll see you next weekend here.